Inflation remains the hot topic of not only this week, but heck, the entire year so far. In this video, we're going to talk a little bit about where you should go while inflation remains high. Guys, we are recording this before the CPI data comes out this week. We'll get that on Thursday. But let's jump into a little bit of forward thinking here, guys, and talk a little bit about, okay, we know what's expected, more inflation, higher inflation and higher interest rates as a result. Where do we go as far as putting our money to work in this environment?
So, I mean, the first thing to think about is what happens when you get higher inflation, right? So, obviously, the stock market's trying to price earnings in the future, and you're going to compress multiples, essentially, right? You get higher rates, that's going to change. It's going to change the outlook for those future earnings. So, you want something that is not trading too expensive. But the other side of it too, which I think is the most simple way to look at it, and you're going to see me pull up Pepsi, so it's kind of obvious what I'm about to say here, but you want something that has pricing power. And what that simply means is, as input costs go up, can this company pass those along to the consumer and still continue to make money? Are they still going to have the same level of growth? Are they still going to have the same amount of revenue, sales, those types of things? And if you find something that has a good brand that might be steady and might be boring, then yes, I think they're going to be able to accomplish that. The other thing to consider, of course, is what space is it going to be in? Like I say, Pepsi in the consumer durables, but there are certainly other sectors which will do traditionally better in high interest rate environments, and that's going to be like energy is going to do pretty well there. So you could always just say any of those. But within each space, so I like Pepsi, I like consumer durables. That's obviously one place to go. But the other thing you got to consider too is within any space that you're heavily invested in, consider something you like that maybe doesn't have too expensive of a multiple. If it's super expensive, even if you like them, they're going to be under pressure, especially if you get a more rapid raising of rates there. So, you always have to keep that in mind. Pepsi's a name that I've liked. I do think that because the fear of inflation has been around for the last 6 months or so, something like this has made a bit of a nice run and been breaking out. And as a matter of fact, there's been some profit taking at the high, but there's still opportunities to be had in this environment because we are getting multiple hikes this year.
All right, none of this has to be rocket science, so let's just make it as easy as possible. Berkshire, I mean, I honestly think, like, we're doing this as an evergreen. I think you can buy Google and stuff like that have huge cash positions and have a business that is basically untouchable besides any sort of a regulation. But if we're going to just play the obvious cards here, let's just go with Berkshire. I mean, what they hold, the same kind of stuff, man. Verizon, Coca-Cola. Here we go. I have this up here. I was talking about this today. Look, it's 42% weight in Apple right now. I mean, I could pick Apple for you. Look at American Express. I called American Express 2 weeks ago before earnings that was going to be a monster. BAC, get BAC in there. Get Coke, get Verizon, get all these names, man. They're all here. Get GM, get a little Visa action, get a little Chevron action. There's my AbbVie down there as well. So these are all high quality companies. Many of them, if not all of them, and I'll have to double check it, so don't quote me on all, but paying dividends. You just take Berkshire, and that's that. Look at how well this is done all year. Like Berkshire right here, from the beginning of the year, we all knew that at some point, and even if you just say, hey, you know when this Fed started turning hawkish, was right in here, right around Thanksgiving-ish in the US, which is this November 30th number. Obviously, we had Omicron and we had a bunch of different things happening, but look at this. Since we started talking about inflation, this thing has just ripped up to the high side and continues to take out highs. So for me, Brendan, it is so simple and it's just so easy, but I'm gonna go with it and I'm gonna tap out and I'm going to say, go with Berkshire.
I love that. If you want some interesting reading, guys, take a second and look up how many shares Berkshire owns of Apple, and then do some quick math on just the dividend payment that's going to go from Apple to Berkshire this year. It's just, it'll blow your mind.
Right, you know what they say, I don't mean to interrupt, but they say every time you sell Apple shares, it's going to one of three people.
Yep. The
first one is the SPY. It's going into every person that's managing or buying an index fund every time you sell Apple. Or it's going to Warren Buffett. Or it's going to Apple. That's it. They have the best buyback there. It's the best name. Continue to buy Apple. Thanks for that little interruption.
Yeah, 908 million shares currently owned by Berkshire Hathaway. Amazing. Pepsi as well. Great idea. There's a little look, guys, at where to go in a high inflationary environment.